Hi, I'm Alex and welcome to the channel. So today I want to talk about the aviation sector and specifically airlines. So in this recent crisis, they've been one of the hardest hit. We've seen share prices plummet, we've seen passenger volumes at an all-time low, we've seen governments having to intervene to help them stay afloat. Some investors have seen this as an opportunity to buy shares cheaply in airlines. However, I'm not in that camp. I have some bigger reservations and concerns about the sector overall, and I hope to outline those in this video. Now I'm going to structure this video in two parts. The first part is going to be looking at the market and the key challenges and dynamics there, and the second part will be more focused on specific airlines. As for me, I'm a professional investor and I've been investing for over 10 years now. I created this channel to help people learn to become better investors and to try and help people think more critically and analyse the investments they're making better. Now if you like the content I make, please hit like, please subscribe to the channel. All support is really appreciated. I've got similar videos coming out focused on the cruising sector, other leisure sectors, financial institutions, both banks and insurance companies, and loads of other really interesting content. Anyway, let's get straight into the video. Now this first part of the video I'm going to split into three different parts: demand, supply, and other. So first, let's start with demand. Now this is really important because this is ultimately what will drive the revenues of the sector. And I like to think of this twofold. First of all, business travel and business demand. Business travel is extremely important for the aviation sector. Whilst it only makes up about 12% of passenger volumes, it accounts for a lot larger proportion of profitability. In fact, on some flights, business travel can even account for up to 75% of the profitability. So how should we think about this? I think I like to split this again into short term and long term. In the short term, I think businesses are going to be quite risk averse. They're not going to want their employees to travel internationally, and currently technology-led solutions such as video conferencing and other alternatives are working really well, so why take that risk? Also, there's other issues to consider, which actually may restrict employees from travelling, such as insurance concerns. And so I think in the short term, the demand for business travel will remain down. Now, what does it look like in the longer term? Personally, I think the long-term demand for business travel will also decrease. Business travel can be a large cost item for companies, and given that technology-led solutions like video conferencing again are working very well, this can be an extremely efficient way for companies to recognise cost savings. So I do believe this is a phenomenon that we do need to factor into any investment thesis into the airline sector. It's so important, as we understand, in terms of profitability. And now what about the other side of demand, the leisure travel? Well, we know this is highly correlated to disposable incomes, and again we need to think about this short term and longer term. In the short term, disposable incomes are going to decrease, and that will result in a lower demand for leisure travel. And this will be more pronounced at the luxury end rather than the value end of the spectrum, but it will be observed across the whole spectrum. Now, in terms of long-term leisure travel demand, my belief is that this will actually rebound and people will continue to travel and take international holidays. Let's move on to the second piece, the supply. How will the supply of air travel be impacted, and how will the cost of that supply be impacted? Well, I think firstly it's important to remember that actually a number of airlines do run unprofitable routes that are subsidised by more profitable routes. So keep that point in mind. Now, in order to restore confidence in air travel, a number of changes are going to have to be made. New procedures will be introduced, and I think the air travel experience will be slightly different. Measures such as social distancing, having to have more empty seats on aircraft, more lengthy security checks where people's temperature and health is checked, and also a deeper cleaning, more intensive cleaning of aircraft between flights is something that we should expect as well. Now, all of these measures ultimately have an impact of the cost of that supply. Screening and health measure costs will increase, and that will be passed on to airlines. Having enforced empty seats on the aircraft will impact the overall capacity the airlines can run at. And a more thorough cleaning of the aircraft between flights ultimately means a slower turnaround time as well. Now, all of these measures increase costs and ultimately decrease the profitability of airlines. Now, obviously, there's the important question of how long these will last for. Now, I think that's a really hard question to answer, but I certainly think it's something that we're looking at for the next couple of years at least. And let's not forget, some of the terrorist activities we've historically seen have resulted in changes to the ways and habits that we have to travel forever. And so that certainly isn't out of the question for me. Now, the third piece here is the other category. Now, what I want to include in here is firstly, financial obligations. Most airlines lease their aircraft. And what that means is they're contracted to make lease payments on certain dates. Before investing in any airline, you should really understand what the timing and size of those payments are, especially in times like this, when airlines are making extremely reduced revenues. I think it's also very important to understand what happens if the airline fails to meet those obligations. Are there cross guarantees on those? Does that mean if they don't make the lease payment, they lose all of their aircraft from that certain leasing party? These things are so important to consider, and so that's something that I would definitely look into in detail. The next point, another, is the cost base. So a large proportion of airlines' costs are fixed, meaning that no change in the volume of flights they operate will change that cost. These are costs like salaries, maintenance of the aircraft. Now this is so important to remember that when an airline is operating reduced flights, the cost base still remains as it was previously, meaning the impact on profitability is going to be much larger. Yes, there are obviously variable costs in the model, but it's a much smaller percentage of the overall cost base. And then one final thought before we come on to talking about specific airlines. It's something that's been observed in both the US and in Europe. Some airlines are stopping flights to less popular, less travelled airports. Now the impact of this could be massive. Reduced traffic at some of these airports for a sustained period of time could ultimately mean those airports going bankrupt. Now hear me out, the loss of those is so important because that also fundamentally changes, especially in Europe, some of the low-cost travel model completely. So what about the specific airlines that we can invest into? Now firstly, air travel is highly commoditized. Now by that I mean there's very little differentiation between different carriers. Airlines struggle to differentiate on much aside from cost. And given that consumers are quite price sensitive, what this meant is that over the longer term, the profitability of the sector has decreased. Now I think when you're looking at airlines, you should split them into two broad buckets. Firstly, value, low-cost airlines. Your Southwest, Frontier, Ryanair, EZJ.L. Travel on these airlines is predominantly leisure-based. And as we discussed earlier, aligned to disposable incomes. So in the short term, I expect to see a slight hit on these businesses, but I think in the long run, the demand should be there, provided two things. Number one, if they're operating out of these secondary or regional airports, which gives them a lower cost base than the main airport in that city, and that is to go bankrupt, then there's a question mark over the business there. And secondly, what the impact of the increased costs to make consumers feel happy travelling again has on the low-cost travel model. And then the second bucket is your international, your premium carriers. AA, Delta, United, British Airways, Lufthansa, the likes of those. The big question mark for these airlines is the impact of the decrease in demand of business travel and what that means for their model overall. Not to mention the increased cost to make passengers feel safe travelling again, and also the real potential. These airlines may choose to stop operating routes that are less profitable and focus on their core profitable ones. Now I didn't want to make this a really long video, and it would be that if I looked at each airline by airline and did the proper in-depth analysis that one would need to do to get comfortable on whether you could or could not make an investment in that business. Now if that's something people are interested in, I would love to make those videos, so please let me know in the comment section below, like the video, subscribe to the channel, it's massively appreciated. Now ultimately I'm not optimistic for the sector, and I think it'll be really interesting to see the Q2 earnings released. Now I've listed some of those down in the description below, and so we should definitely be keeping a close eye on those businesses on those dates. For me, there's just still too much uncertainty around travel restrictions, potential travel bubbles, and the risk of a second wave of infections. And as such, it's not a sector that I'm currently investing in. Anyway, thank you so much for watching, and I'll see you in another video.